Good morning, Green Room. Happy Friday. All right. Well, good morning. Good morning. I really have to go back and look at the history, but these market internals are about as cooked as I can ever remember. Breadth, I have seen it further, but I mean, sentiment is to the point where, wow, this has been an amazing drop in the market in a short amount of time. So, I mean, that's why I have the weekly chart up here of the transports to see the extent of this drop from this high here all the way down to this support. Well, this support and below that, well, we'll see what happens. You'll see the area down here, but yeah, so you would think at this point there's some stabilization. Maybe we get a little bit of a anemic Christmas rally, and counter trend bounce here. It certainly seems as a viable thing to happen at this point with such a drop. So, hey, Cliff. So let's take a look. When prices come down to support like this, it just sliced through these other this area here, and it you can see that it's stalled here and then just went down to the next. So when I get down here, we look for stabilization. And as you can see, as prices came down, this was that wide whippy day as prices tried to turn and failed. But you could see yesterday, as much as, the markets went down, the range here is narrower than that range. While there isn't larger volume, you have a narrower range. So the selling did subside a bit, and that makes sense being in this area. So we'll just go through the rest and see where they're at. And obviously, well, not so obviously, maybe you didn't look at this, but the spider slashed through the low of the year. And so then we were looking yesterday for prices to come to 142, 143 area. So support and resistance are areas. So, you can't look at them like many do with their, Fibonacci extensions and levels and all this, hocus pocus, holy grail type of indicators that try to define support and resistance to within a decimal point. And if that isn't looking for the holy grail to define some level, and I really get a kick out of these, gurus that want to sell you their proprietary numbers. What marketing BS for those of you that are new to the markets and may be lured into such marketing. Don't buy into it. You look at these as areas, and where it stops should be somewhere in an area. Sometimes it happens at a pinpoint, pivotal point, a swing low. That's just technical analysis working, where you have enough people focused on one point in time. And I'm just reading Alex's your question about failed December. December never been the worst month of the year. Okay. December has never been the worst month of the year. No, it's usually September, followed by continued selling in October that makes the low. And this year, October was the high, so the whole thing inverted. But what I was questioning as well was, has there ever been a time where there was no Christmas rally whatsoever? So we're a couple of days away from the holiday, and what could a rally be? A little none at this point. Not a rally defined by the daily time frame anyway. I can't imagine. Maybe a rally on the 15-minute chart or the hourly chart, but not on the daily chart. So prices are into this level here, so when it slices through here, we just look to where there's some consolidation looking over to the left. And, so now we look to see if it stabilizes there. And, so we're in there. And of course, the way this went up here, it was a trending move. So it's more difficult to define a point versus just up here where, you had multiple tests like that, where it came down hard, it went up, it came down. That's an easily definable reference point, where here it's like, it's trending, it's bullish, right? It's trending up in that way. And so we are 1.5 trading sessions away from Christmas. Yes. So for intraday, we're here to take advantage of whatever it is. So, so as we look at this type of reference point of support versus this reference point of support, clearly it's different. But so we don't know exactly where it may stop, but we know we're in an area, and that's all we need to know. Then we can move down to a smaller time frame and analyze the price action in that smaller time frame, and we look for gap reversals, breakdowns that fail, small retest patterns. We look for bullish patterns that are in alignment with our bigger picture bias. Right? It's relatively simple, but so many make it so much more complicated, with all the indicators and lines and all of that. So we're into an area here. The daily charts are not suggesting anything, right, on the long side yet. But that doesn't mean from an intraday trading point of view, we're not going to find opportunities. But we just have to keep that in perspective, meaning, hey, it's intraday trading. It's not swing trading, because we don't even have a swing trading, a counter trend set up here yet. No, we continue. And if you're an intraday trader, we'll find opportunities. If you're a swing trader, you're going to sit on the sidelines probably until next year. Accept it or don't. Be frustrated. Maybe you get in and do something that you probably really didn't want to do. That's what all of us tend to do until we get some experience in the markets and get beat up a bit, and then realize that, hey, stick to the plan. Because the plan is what we know works the majority of the time. So Qs, blast down here on the weekly chart. It's in this area of support. So that's a clearly, easily defined reference point where prices came down hard and they went up hard and fast. So that's where the Qs are. All I had to do was look to the left, no special lines, measurements, or what have you. Right? Real simple. Is it going to hold here? I don't know. This weekly pattern is not one that suggests that this is ready for any kind of a substantial move to the upside whatsoever. And it doesn't even suggest that on the daily time frame. So wait. If you're a swing trader, you're going to have to wait and see when things begin to set up. Now is not the time. And I'll switch to intraday when I get to the futures. Today is quad witching. Volatility is expected into a close. These quad witching option expiration things years ago used to be wild. They haven't been so wild anymore, but we'll see what today brings. I think the wildness has already been seen. So here the Russell has led the way down. Clear reference point of support. It's sliced through it. Now, the other concept here, as it comes, as it relates to support and resistance, is that when prices do something like this, of course it's bearish, but a retracement concept that often plays out quite well as a trading concept is that when prices retrace more than 100%, right? This went up and it came all the way back down and it breaks through support. And that's kind of like your little flush that it takes out some stops. And I know we're looking at a weekly chart, but it works on intraday timeframes. And just, I'm just explaining the concept here is that when that happens, it's typically where you're going to get a reversal. So do we have a reversal on the daily chart? No. Look at that volume spike. So that is something to consider as far as possibly a low in place here in the short term where you get a climactic volume spike. And also notice the range here is wider than yesterday's range. So we had a range decrease, and we had an expansion in volume, which means that on some level of analysis here, you had buyers take a little bit of control, or more than that they had on, the prior day. So a little bit of something as a clue to a turn versus, the actual turn happening and the reversal, day being seen. Transports we looked at, and diamonds, the Dow cut through that support. At this point, we had a little bit of this discussion yesterday. Alex had brought up, well, hey, this still has room to fall, and it may get there, but many times by looking at other markets like the Qs here, which are already at support, this market can stabilize, and that can stabilize another market. And you can say, what does the NASDAQ 100 have to do with the Dow? Well, maybe not a lot, but there are stocks in the Dow that are in the NASDAQ 100. So that can stabilize. So watching multiple markets and seeing where they're at in relation to their reference points and their reactions at those reference points can guide to, hey, I think the Dow is coming down to this level, or whatever you think, this level, whatever the level is that you're focused on. The point is, it just might not get there right now because of another market that has begun to stabilize. Both diamonds and spiders broke weekly major support, ending the uptrend. Absolutely. This has violated major support. It's no longer in an uptrend. Do we have lower highs and lower lows yet? We have to look at the pivots, maybe not. But one of my rules is that if prices break down through two prior swing pivots, even if it doesn't have lower highs and lower lows, I define it as a downtrend. MS, Alex, means it's a short or acronym for major support. Major support being defined as a swing low prior to a higher high with 3 higher low bars to the left and the right. Right? So what we do is we make clear definitions of what we're talking about. That removes as much as the gray areas as we possibly can. So we're not looking at subjective things and being indecisive about our analysis. All right, let's go to intraday charts and look at where the futures are here. So S&Ps, you can see this little support here. Yesterday formed a bottoming tail. Some buyers showed up, and as those buyers showed up yesterday toward the end of the day, I was like, okay, here are some things that are going to bounce here. We had intraday W bottoms like in, Netflix, PayPal, and different stocks where things started to bounce. And then the latter part of the day, it was just like, okay, buyers, let's see what we can get going here. And things kind of petered out, and just, okay, the market ended, and, whatever setups there were there, they just didn't follow through very, very much. And, we kind of went out with a whimper. But you can see right now, we've got an inside day. It's the start of stabilization. And you can see on the 60-minute chart, we got a little shakeout going here where it poked down, it came back up, that's the bottoming tail bar. And now we've got this little, sideways move here, and buyers beginning to step up. And so we can get a counter trend move here. Very short-term put spreads, you're aggressive, intraday rally by a call, short intraday trades on the long side as long as things are going up. And I always try to say, look, if you don't know what you're doing, meaning you don't have experience or you're indecisive, this is where, new traders get into trouble because things happen fast at times intraday. And if you can't process that information, which is what you're doing as an intraday trader, don't do it until you're ready. Paper trade small, right? Small, and then you can't get hurt very much. Or, don't trade from a 2-minute chart or maybe a 5-minute chart. Trade from a 15-minute chart where you're slowing things down. Qs, same situation, right? So down through some support, bottoming tail bar yesterday. It didn't close green. We got an intraday bar right now. So the question becomes, let's just put this up here. Right? The question becomes, let's throw that up there. Where's our first resistance? Well, yesterday's high is first resistance. Yesterday's low is first support. And this may just trade inside that range. But if prices get up into yesterday's high, well, odds are there's going to be sellers there. Right? Pretty simple analysis there. Sellers are up here. Buyers are down here. So far, just neutral inside this range. Can you trade inside this range? I don't know if you can or if you even want to, but that's resistance right now. If it can get through that, kind of opens up the door to a pretty decent move from an intraday, view here on this chart because of the way it came down. This is what created the void. So this is what we are interested in right now as intraday traders. Bullish price action, right? Bottoming price action, I should say. It is bullish in the short term where it's refusing to go down, sideways, building support. It's going to try and go up. Right now, there isn't much room to the next resistance area where it would stop. And then we'll look for what kind of price action happens here. So what you want to be looking for, right, is if we could take this price action, green doesn't work real well there, but if we could take that price action and put it up here, right, this is the kind of price action we would want to see at resistance. That is saying, hey, buyers continue to step up here, even though it's at resistance, and it could open up the door to go into this void where we could get a pretty big move from an intraday trading reference point. All right. 1 second here. What's going on here? No, Dow. It's not the same, but you got the idea. Bonds, jiggling around, came in yesterday. So the big focus here is that yields are going down and the yield curve inverting. We've got oil, which continues to be weak. That's bearish. Looking at things from, what's happening in the economy and the recession. Oil's been going down. Interest rates have been going down. That's bearish. And why gold is going up here just kind of doesn't really make a whole lot of sense based on that. If you think about it from gold going up because of a view on inflation. Anyway, yield curve, right? There they are. They're not inverted yet. This is the last time that they were. And we had a big sell-off in the market, had a big sell-off, but this is where it potentially gets real ugly, and where price can go down a whole lot more. So we're not inverted on any of these yet, but certainly pretty close. And our internals here, sentiment is just, I'd have to go back and look at the history as to if last time it was down here, but when I say these are cooked, they're definitely cooked. And the wrong way option traders, which God bless them, they got it right once this time with this market going down. 1.8 on a closing basis. It's no surprise that the markets are up here a bit and trying to go higher, and them to feel the pain today. Breath at 256. I've seen it down below 300, but we've got alignment here.
Yeah, Greg, I thought yesterday you said it was like 370s, something crazy number.
No, I said it was at a 283, but that was a reading intraday, not at the close. Mm-hmm. So, we got all of these, down at levels historically where markets have bottomed. But look, we do not have any kind of bottoming pattern here. So a green day could be a start. We see how far it can go. The trend is down here. This gives us a guide to where things are overdone. And then, we look for stabilization where, we get patterns that now say, hey, the coast is really clear. And that'll take time, and it'll take time here. And look, it's even possible that this gets worked off. That's one of the things we're going to be looking for, that this gets worked off, and this hasn't made that much headway, which, would bring us back to, right, this chart. We didn't look at this one exactly. We looked at the diamonds, but look, we assess things in the moment. We see what's happening. We continue to measure where they go from there. And then it's like, hey, you had the opportunity to get this market turned around for some counter trend move. Could you form that W bottom? Could you form that head and shoulders bottom? Could you make a big rally?
Yes, thank you.
Couldn't do it. Well, these levels come into play.
And dinner was fantastic.
What's that?
Oh, I was doing a text to this girl. Sorry.
You hadn't let that girl out of the box yet?
I did. This is a different one.
All right. Well, I'm done. You can take it over.
I'm glad I was talking polite. You got to watch these microphones. My friend at his new $8 million house, he was showing me all his electronics. He said the whole house is a smart house. And it's just crazy, the things that are in there. You just talk, you do this, it's amazing. All right, we officially are flat. So let's go right into some gappers and things I'm watching here. And Greg laid it out very clearly, our bias, there's no tradable pattern, this and that. So it's a fantastic time to sell these expensive put spreads when the charts are at least showing stabilization. Now, I don't like this wide range bar right now. I did post an alert to sell Qs, and so now I'm going to cancel that. So give me a second. Yeah, I mean, I like the bullish pre-market reverse head and shoulders, but I don't like this this 5-minute action right now. So that was simple. I just told him to hold off. Let's see. So, I mean, I love directional trades, but this is not an environment for that. But as I said yesterday, remember this consolidation into the close, this 15-minute resistance. If we can get through that today, I will be selling more put spreads. So that's my bias right now. And I would love if we had another panic day, sell off another 1,000 points. I don't care. FL looks like it's up in sympathy with Nike, 50.25. This is a beautiful gap. It's kind of a small island reversal, weekly support. So that looks fantastic. Remember NTs? I've been watching for a while, and it's not earnings. I checked, but look at this beast. It's gapping up to 250, which is a little excessive. I would have preferred an ideal gap would have been right over Wednesday's high around 242, but it still looks great. IDTI, look. IDTI gapping over all of these bars, now making this a breakdown failure and support. Bullish weekly, monthly, that is incredible strength in this market. Overlay this weekly chart to the spiders, to anything. And that is amazing. I'm going to put that in a window. So now I got 3 that I like. WBA had earnings. What type of trade is this? Anyone, quick. Climactic buy setup at the rising 200. Bullish reversal bar. This looks fantastic. So we got, I don't like the market, it has stabilized. Oh, that was quickly lived. But that's all right. We'll keep an eye on it. 30-minute high. Here's a climactic buy setup, but it would be short term. Yeah, look at these volumes on these days yesterday. Here's the Nike on earnings, but it's gap into resistance. I got no interest. CAG. Now this is possibly a wide range ending bar. That was earnings. I don't like that green bar kind of ignored there, but I'm going to keep this on my list. Maybe it sells off a few more dollars, but do you all see the rubber band that we're looking for on selling exhaustion? I don't need to look at these prices at all. Look at the bars and the distance from the 20 MA, and it's like, just visualize a rubber band. And that's what's going on there, rubber band. So I'm going to keep that on my list for a while. Cron, if it can still, it's still a valid trade if it can get over Wednesday's high. Facebook, it's not ready. SPY. Yeah, it's still in a trading range though. So I'd still say, I don't know. I'm still just watching, but trend is down. So I don't know. I need more information. J&J, I'm watching for a while. High volatility on its bad news. There's our NTs, Sienna. See, now I lost interest in Sienna. I've been watching it ever since this pro gap day. And now I'm deleting them.